Right, we got the YouTube streaming, we got the TikTok streaming. We notified all of our members on the Discord, on the discussions here. If you're watching this as a recording on YouTube, hope you enjoy the video. We do these live every weekday, so if you are interested in asking questions while we do this live, definitely check out the crypto market update or the global macro update. That is basically from the start of the morning until kind of a little bit later in the afternoon every weekday, and we go over some fundamental news and we go over some charts. So super interesting stuff. I'm gonna start this here. We have no one on YouTube and we have only one person on TikTok, so I don't think we're gonna wait for much longer. It'll be a pretty interesting video for today. So let's get our recorder and let's start it off here. Let's get the flash back, which is what we're using. Today's going to be a lot about mining and on-chain analysis. So it's going to be something that I'm still learning, that I'm still digesting, and I find it extremely interesting. And this chart that we have as an indicator is the Bitcoin production cost for miners, and it's going to really give a good understanding of what these two lines are, what the production cost is, what the electrical cost is, and all that stuff. So we're getting a little bit of coffee, and then we'll just get right started here. All right. Let's get this going. Hello traders, welcome to another crypto market update. In this video, we're going to talk mainly about mining and miners and the whole cycle, trying to understand it. And we're also going to come back to this chart with the Bitcoin production cost indicator attached to the BLX chart. But first, like always, we're going to look at some fundamental news that is within the cryptocurrency market. Mainly today, we're going to talk about mining, what it's going to mean for BTC before, after the halving, and all that stuff. And let's just jump right into the video here. First things first, just want to say some important news. Bitcoin Cash halving today, that happened around 2 hours ago, and BSV to follow. So basically, Bitcoin Cash, which is BCH, will complete its block reward halving over the next 24 hours, with Bitcoin's Satoshi version, which is SV, following shortly after. One of Bitcoin's most controversial forks, Bitcoin Cash, will halve in approximately 18 hours ago, so it's post 2 hours here, as of press time, cutting the block reward from 12.5 BCH down to 6.25. The result of community disputes, Bitcoin's chain split in 2017 formed two assets, BTC and BCH. Consequently, BCH comes with the same maximum coin supply and mining reward payout as the parent BTC, which is 21 million in terms of, the maximum coin supply. And then after the halving, BCH network will pay miners a block reward of 6.25 BCH instead of the 12.5. Bitcoin's cash halving comes approximately 1 month prior to Bitcoin's deflationary event, which is BTC's halving, which is around early May. And that will be an interesting one. We'll talk a lot about that in this video. Let's just jump right into it. I'm not super interested in it. I don't really own BCH, nor do I really trade it. If you've been following us for a while, you know exactly which alts that we'd like to look at. So that's going to be the simple explanation of the Bitcoin Cash halving. Not much more to discuss on that one. Next thing is going to be talking about more of the meat of the actual news content that we're going to be going over today. Bitcoin's price will go up as only profitable miners remain, data analyst. So this is talking about miners, the capitulation cycle, and let's discuss this even more in depth. Approximately 4 weeks ago, global equities markets were in distress, and investors finally realized that the coronavirus was not just an illness restricted to China, but rather a global pandemic which could permanently damage economies across the globe. Crypto markets were not shielded from the mayhem that led to the S&P and the Dow to post some of the biggest losses since 2008 global financial crisis, and investors will recall on March 13th, BTC dropped more than 50% in a span of 24 hours. And a lot of people were saying, how did this happen? And we can see when a catastrophic event occurs, analysts, traders, soothsayers, and crypto Twitter personalities peer through the dust and rubble and attempt to piece together a clear picture of what happened. So let's dig deep in here. Just some important stuff. A lot of companies, hedge funds, and individuals lost leveraged positions. They got liquidated, and the narrative that the crash was the result of the correlation between Bitcoin and the equities market, along with liquidations on leveraged positions with crypto derivative exchanges, seem to have been accepted by the majority of investors. But there's growing concern that Bitcoin's drop to 3750 may have also negatively impacted miners. So this is where we're going to get into the meat and move here. Investors are curious as to whether the current price are below miners' profitability margins, and if the upcoming halving event will incentivize or discourage miners, as Bitcoin prices are already far below the projected prices estimated for April 2020. So then Cointelegraph interviewed Joe, the data analyst at blockchain analytics provider CryptoQuant. So let's read what the conversation from a Cointelegraph member is with Joe, which is an analyst at Blockchain Analytics. Let's read here. First question from Cointelegraph. As investors, are investors right to be worried about the state of Bitcoin miners after the March 13th collapse to 3775? Are there also murmurs that miners could have played a role in the cataclysm of the 50% price drop? What are your thoughts on this? Joe replied, as miners are one of the biggest players in the ecosystem, when they are selling more in relation to other players, it would indicate capitulation and some sort of incoming volatility. So yeah, he does agree that on-chain analysis, looking at miner capitulation, looking at the hash rate, is a valid way to understand this potential drop, or why this potential drop came in. This move could be could be to the downside as miners selling off pushes through demand. This move could be to the downside as miners selling off pushes through demand. I don't know if that really makes sense. But basically they're saying the next move could be more to the downside. It could also push the price up as the last unprofitable miners leave and only profitable miners are left, thus just drastically decreasing selling pressure. So I do completely agree with this. So basically what they're trying to say is soon after, well, this is my take on it, soon after the BTC halving, a lot of the unprofitable miners are not able to maintain their operation because of the unprofitability. If you're unable to make a profit over months, it just doesn't make sense to continue operation. And the only miners left within the mining pool are going to be the most efficient miners, and the hash rate will drop because the other miners have already fled because they're unprofitable. The hash rate will drop, making it easier for the miners that are left to mine BTC, which then will increase their profitability. Lower cost of production will obviously create more margin for profit as long as BTC isn't crashing along with it. And that's kind of how the algorithm and how the process and program works. That's how Satoshi made it. And it's very, very ingenious. It's very, very clever. So now we're going to go into kind of two charts here. This is miner to exchange flow percentage. So what does this mean? So this is out of the rewards that miners are given for mining, what is the percentage of the crypto or of the BTC that are actually going to exchanges. So miner to exchange flow divided by total exchange flow. So this is going to be the amount of BTC that are going into exchanges compared to the total amount of money going into exchanges. Right, and it's based on a percentage. You can see right here, as shown by the chart above, when this metric is low, it indicates a turn in price. So when miners are not sending Bitcoin to exchanges to sell, it indicates a turn in price, which makes sense. If Bitcoin's dropping, if they need to sell Bitcoin, they're going to send that Bitcoin to an exchange to sell it. But if they are able to have the Bitcoin price increase and they're making money from it, well, they're going to hold on to that BTC until it starts to change trend, basically. So yeah, that totally, in my opinion, does make sense. And we can see this is a larger time frame looking all the way from May 2019. So this is going to be a year chart, whereas this is going to be just from basically March. So this is a smaller time frame compared to what we see here. But we can also see the fact that at the bottom here, very, very low percentages here, 0.402. And we can see, I think in this one right here, another interesting insight is that miner percentages of exchange inflows hit an all-time low, all-time being since the start of our miner data in 2016. This was 0.02. This seems to mean that miners are, at least for the time being, still doing relatively okay when it comes to sustaining operations through this drop in price. So at the end of the day, it's looking more favorable for the miners, it seems like, but I do think that the halving will take a lot of miners kind of out, having that next capitulation cycle continue. All right, here, this is the next little segment here. The idea that miners are doing okay looks even more true when we're looking at the raw miner outflows. Although they were high, they weren't significantly high compared to any previous periods or period. And this is the exchange inflows, BTC inflows into all exchanges, and we can see significant pop-off when we had that 50% drop, a lot of people selling, but now we are actually seeing the price decrease, which is signaling that there's going to be a reduced amount of supply. But like always, it could change very fast. Look how quickly this shot up. So things can happen pretty quickly. We don't want to dismiss that it's going to continue going up, because our longer term bias is still the fact that we're going to have a pretty significant drop, probably post BTC halving, but we'll see. All right, comparing that to exchange inflows, we can see that the exchange inflows had a record all-time highs, being nearly triple previous highs. This means that lots of Bitcoin, more than any time in the previous few years, went into exchanges. The significance is that Bitcoin going into exchanges is a way to measure desire to sell, and we can see desire to sell was relatively the highest we've ever seen. So, like we said before, when miners put money into exchanges, good indication that they're going to sell, which is obviously going to put increased supply on the market, which is going to drop the price. Increased supply, obviously with the same level of demand, will drop the price. We talk about that all the time. It's very simple supply and demand economics. All right, so another, in crypto terms, one way to look at this would be that it seems like the weak hands have sold. Thus, it seems like that based on our data that the Thus, it seems that based on our data that the main miners, at least for now, have significant enough cash reserves to maintain their operations until the halving, bearing another significant drop in price. So this is kind of hinting that we could see another drop in price after the halving. I completely agree. And I think a lot of people are expecting BTC to instantly shoot up after the halving. And I kind of think it's the opposite. When there is the revenue cut in half for all miners, that's going to have a very negative impact on the people that are right on the cusp, are making a little bit of money, but not a lot of money. Because when you cut that revenue in half, they're now suddenly in the red, they're negative, they're not making any money, which will then basically have to make them close operations, and before they close operations, they have to pay for their operating expenses, they have to pay for their debts and all that stuff. And they have BTC as an asset that they need to sell in order to pay the rest of their stuff off on fiat, and that's where that huge amount of supply comes in. So Cointelegraph asked another question to the analyst: does this take into account things like borrowed funds, operating costs, fiat, and crypto loans? From your view, what is the break-even price for miners? And this is where I got the indicator that we talked about at the beginning of the video. JN, which is the analyst, said Charles Edwin's Bitcoin production cost data, as it gives you a band that has pure electricity costs on the bottom and electricity plus overhead at the top. So this indicator I found super interesting. Let's talk about it a little bit more. I'd put the break-even price between 7,500 and 8K for a typical mining outlet right now. So just understanding this is going to be for the average typical mining outlet right now. Obviously, you can't have every single miner on this chart and see exactly which people are unprofitable and which people are profitable. But at the end of the day, this is kind of an average of the typical mining outlet. So we can have a good estimation of if miners are going above production costs, so then they're actually making money, if they are still above the cost of electricity but still below overhead, or if they're really under both, and that would mean that they're really in red and only the most efficient miners are able to survive. The biggest things that will change this are obviously the halving and the mining hardware. As older inefficient S9 and S11 similar models go offline and newer miners take up more hash rate, it might ease the burden on miners. Yes, we'll talk about more about the miner capitulation, but just from listening to a podcast from Pomp and a well-known crypto miner, and he's a part of like Genesis and all that stuff, he expects like the mining capitulation to continue after the BTC halving because it makes sense, right? If your revenue is cut in half, it's going to be hard for you to continue operations as per usual because that's a significant cut in revenue. And if you're barely able to make any money from this, you're not going to be able to when the BTC halving comes in. So then you're going to have to sell your assets, Bitcoin, including Bitcoin, and that's going to put a increased supply in the market. And that's the overarching view of what we have going on here. Quick discussion as to what the miner capitulation cycle is. We already talked about this, but this is a really quick refresher as to how the process works. Like anything, there are cycles in seasons, in markets, in miners, in really everything. And let's continue reading here. So this is what the actual mining capitulation cycle is. While this relationship could be a fluke, there's a rationale behind this trend. Downward difficulty adjustments completes the so-called miner's capitulation cycle. In short, let's say we are at a point where mining is highly profitable. This leads to more miners joining the network, increasing the hash rate. As a result, the difficulty adjusts upwards and the margins get a little thinner, but mining is still profitable, incentivizing more miners to join. And this is the hash rate we can see right here. Hash rate is basically going to be the difficulty of the mining process. The higher the hash rate, the more difficulty it is, the more energy it costs to actually mine Bitcoin. And we can see right here, the high hash rate in the past 180 days was on March 7th. And then when Bitcoin's hash rate dropped, it was in confluence with the drop in price. When Bitcoin's price dropped, miners can no longer become profitable because let's say that they were just on the skim of being able to make money. If Bitcoin's price drops, now the reward that they're making for mining is no longer going to cover the cost of the production to mine that Bitcoin. So then a lot of miners go offline, they close operations, reducing the hash rate, reducing the difficulty. Less people trying to get that same amount of reward reduces the difficulty, which makes the electricity costs go down, which then makes it easier for the efficient miners that are still able to mine to get more profit, which is kind of like a very efficient system to funnel the capital into the most efficient miners. That's basically what this is programmed to do in a very, very systematic, very, very smart approach. I'm blown away at this system that BTC and how Satoshi created it. But yeah, it is unbelievable. It is capitalism at its finest, right? There's no bailouts. If miners are not able to have the efficiency they need, they will go bust. They will go bankrupt. And then another company will buy up the assets, will do their part in the actual mining. So yeah, this is capitalism at its finest. This is free markets at its finest. There's no bailouts. There's no government meddling or injections of anything. This is pure free market operations, which I absolutely love. So let's continue on here. We'll talk about this indicator very shortly. Let's continue on here. This cycle continues until a relatively large proportion of miners cannot keep up anymore. Some are forced to liquidate an ever-increasing percentage of their newly mined Bitcoins, eventually depleting their treasuries. This causes an increased supply of Bitcoin for sale on the market. At some point, they capitulate and stop mining. The hash rate decreases, and finally, the difficulty receives a downward reset. And Philip from Genesis Mining says, it's no different from traditional markets. You have to sell everything to keep the operation going, to pay off your debts. As a miner, you have bills to pay, and you have to pay for electricity for operations. And and your expenses are in dollars. So as the price of Bitcoin is dropping, it means you have to sell more of your inventory, aka BTC, just to keep going. So as BTC drops, there's more and more supply coming into the market. And the only thing that would stop it is the reduction of supply, meaning that the miners that are unprofitable have to basically sell all their Bitcoin, so then there's no more sell pressure. The only people that are mining are the very efficient ones, and then they are able to continue the network going, and then there's a certain point where there's no more sell pressure, and obviously with less sell pressure there's going to be more demand, and then thus the bullish trend will start again. So that's kind of the whole mining cycle. Hopefully you got a good understanding of how this works. Now going on to a little bit more in-depth understanding of it using an indicator. I actually didn't know about this, and this is, in my opinion, a really good indicator to have on your long-term chart, because it really gives a good understanding of where miners are in relation to the price of Bitcoin. And I got it from here. So this is going to be where I found the indicator, and we'll talk about how to actually find it on TradingView. But we can see right here, Bitcoin's production cost. So takeaways: Bitcoin's electricity consumption can be used to estimate Bitcoin's production cost. Bitcoin's production cost can be used to estimate miners' profitability. And Bitcoin mining has historically been a very profitable business, but understanding the estimate miner profitability is very important in terms of on-chain analysis. Let's continue reading here at kind of like the later half of it, because this is where it gets interesting. This just talks about how they're actually getting the production costs and calculating the electricity consumption and all that stuff. But you can read about that if you would like. Not going to go through the whole thing, but I'm going to talk about more the actual indicator itself. If you would like to give this a read through, just ask me, Keith, on the Discord, and I'll be happy to share with you this link. So let's just read it here. Surprisingly, I can't highlight this, so I'm going to try to look here. All right, the Bitcoin electrical cost, Bitcoin price floor. Bitcoin's production cost provides insight into the profitability of Bitcoin mining businesses. Price drops below the Bitcoin production cost tends to be short-lived. This makes sense as high-cost miners go out of business, the hash rate plateaus and falls, and miners in general are less inclined to sell at a loss. However, Bitcoin electrical cost offers a stronger price floor. Over short periods, a number of miner business costs are sunk. They're already paid for the hardware and stuff, contractually locked in, and can be deferred hardware upgrades. This means that Bitcoin miners can be operating at a loss over a short period of time. This makes sense provided the Bitcoin miner price is above the Bitcoin electrical cost. If the cost of running your mining hardware is less than or equal to revenue it generates, you may as well leave it turned on until such a point that business losses make this wasted effort undesirable and the opportunity costs too high. Let's just see. I don't think there's any more to talk about here. We'll talk about the halving. I think that's the end of the section here. We'll talk a lot more into what we see right here, because obviously this is pretty important as to what we were initially talking about. So there are two main lines within this chart. Let's get our picture or snip and talk about the two lines that we have. So we got the green line, which we can see up top, which is right here. And then we have the red line, right? And we'll talk about what it is, how to find this indicator, and then more in depth as to what we've seen recently. So this top one, as you can see, is the total cost to operate the business, to mine Bitcoin. This is involving, rental fees for the business, the actual employees, and everything revolving the cost of mining BTC. That's the green line there. That's the top line. And then the bottom line, which is right here, which is in red, is just the electrical cost. So this is the bare bones cost to mine BTC, not including everything else. And we can actually see that right here. If you just double click, electricity is red. So this is the minimum electricity, the average minimum electricity cost to mine BTC. And then the green is the total, including all other operational costs. So we can see, if we're really taking a zoom back on the daily chart, the actual profitability for mining has been really great since 2016 onwards. Also, this is the halving. That's why it looks so off there, because instantly the electricity cost goes up and then the operational cost goes up basically double because it's cut in half, right? So we see all on the 2016-2017 bull run, and basically for 2/3 of 2018, all miners are profitable, right? So this makes it very appealing for all miners to come into the market, because look, everyone's making money mining. No one is under the operational cost, meaning basically every single miner is in profit. This is how much it costs to mine one BTC. Let's say it's 2,200 and you can sell it for 6K, right? That's a huge difference in discrepancy. So basically everyone is able to make money in this market. But as time goes on, the hash rate increases. What is the hash rate? It's the difficulty to mine Bitcoin. Also, let's just bring this right over here. Right, so as time goes on, the hash rate increases, the difficulty to mine Bitcoin increases as well. And with that, there's going to be competition, right? Because there's only a certain amount of rewards for BTC that is given to miners at a predetermined set time, at a consistent basis. And if there's more people trying to get that same single reward, it's going to be a lot harder to get that reward, right? So as we can see, as the price fell, mining became less and less profitable, with the operational costs still continuing to go up because hash rate still hasn't moved. And we can see hash rate is increasing because we know that operational cost is increasing, right? Increasing, making higher highs and higher lows. And then what do we get once we start to see the profitability really completely break even, if not go a little bit under? This is the break point, right? So right here between October and let's say November of 2019, we saw a lot of miners break even for a long period of time, like from right here to right here. They are just at the operational cost, so they're still making money from an electrical standpoint right here, but they're not really making money counting every other operational cost with employees and rent and all that stuff, right? They're not really making any profit. So at this point, they're having to basically sell anything that they have within their treasury, which is their wallet, their Bitcoin wallet, that they've held on to from this huge profitable time from 2017 and 2018. They have reserves of Bitcoin. But right here, their operational cost is still at, let's say, $10,000, and the reward they're getting is less than $10,000 on a monthly basis. They have to sell their reserves. They have to sell Bitcoin in their reserves in order to pay for the operational costs on the monthly basis, and that is in fiat. You have to pay in USD or whatever country you're in. You have to pay in that fiat currency. So you have to sell Bitcoin to pay for it if you're in the negative. And we can see right here, once the capitulation starts, it's a massive sell-off, very, very quick, right? Because like as a person holding an asset that has to pay for operations, you don't want to be selling way down here and still having to pay for the operational costs way up here. So once that price starts to drop, you probably have a stop loss order. You probably have some sort of order that instantly triggers once it drops. And soon after, what do you see after it drops? It hits the lowest cost possible for electricity, really. This is the electrical cost. Remember how this top is the operational and this red is the electrical cost. So this is really the bare bones amount that you need to even continue the operation, even though you're net loss. So during, let's say, November of 2019, all the way to April of 2019, a lot of miners were in a loss. They're losing money operating their business. But because they have sunk costs, buying mining rigs, paying for contracts for like an extended period of time to rent or whatever the case may be, they already have that sunk cost. So they're saying, okay, well, we'll sell more from our treasuries until the price inevitably goes up, because we know that, you know, as an efficient miner, we can handle this drawdown, while other less efficient miners are unable to handle the drawdown because they have less in reserves. Their operational costs are a lot higher, so then they might be all the way up here, so they're having to sell a lot more of their reserves. So during this time, the allocation of capital is getting away from inefficient miners and going into the most efficient miners possible, because all the inefficient miners are leaving. They're selling their Bitcoin and the hash rate reduces, and the efficient miners are left to take that reward, take that capital, and put it towards better use than the inefficient miners that we saw that increased the hash rate in the first place. So yeah, in short, that is really the understanding of miner capitulation on a chart, which I find this extremely useful for understanding it in a visual way. Now, let's zoom in here because we've seen it happen again. So let's zoom in and discuss right here. So we already talked about what these two lines mean, the green line and the red line. We already talked about what it means, so you understand it. Now let's talk about structure, right? We can see right here, massive dump to the downside, right? We did not get the operational cost, which is this green line, to go down instantly. It took a little while, right? So we saw the dump down, we saw hesitation. This is probably when a lot of the other miners said, fuck it, I'm just gonna sell. I cannot keep running a negative operation where we're losing money every month. I'm gonna go out of business. I'm gonna sell stuff, I'm gonna go out of business. This, accompanied by many other inefficient miners saying the same thing, is now creating less hash rate, less difficulty for the miners. So then the operational cost goes down because there's less hash rate. Less electricity is needed to get a reward if there's less hash, right? Less hash rate. The difficulty becomes less. So then the operational cost reduces. Electricity cost reduces. So now, yeah, they're losing money, but they're losing less money than they were back here, right? This is the worst of it. Because they're even going to the electrical cost at the very lowest, right? So if it goes below that, the cost of actually mining it just in the electrical cost is more than they can actually sell in Bitcoin. But we can see a very, very key floor that it held. Didn't go below that, didn't go below that. So in my opinion, that was a pretty good level of a base. Now, what did we see? After the massive capitulation of the BTC miners, we saw the operation cost go horizontal because that was a huge capitulation from the inefficient miners, and the only miners left after this point here are the efficient miners in the market. That means that they're still continuing operation, they're only selling as much as they need, but the amount of sell pressure is significantly reduced because they all left during this zone here, right? This is the zone where a lot of supply, a lot of the miners went to capitulation, right? They all died here. And the only ones that are left are the more profitable ones in this section. So at this point in time, we do see the profitability isn't great, but you're seeing that let's just put that there. You're seeing that there is a lack of supply coming in because you're seeing the hesitation for the price to make lower lows. You see a low here, higher low, higher low, higher low, higher low, accompanied by a continuing operational cost that is remaining relatively stable. This is looking pretty bullish. And once you start to see the price go above the operational cost of Bitcoin, that is when you see a huge parabolic move, right? That is when you start to see no more real supply coming into the market because all the Bitcoin that is given to rewards by miners is now going into the treasuries because it's making money, right? They don't have to sell more in the treasury because they're now making money to cover the operational cost of Bitcoin, right? And then we see a huge move up because this was a massive supply injection in the market where a lot of miners injected a lot of supply into the market. There was an over amount of supply, and then what do you get after? A demand shock that pushes the price up because we got a reduced amount of supply. So that was 2018, 2019. I found this extremely interesting, just personal outlook on it. So now you're thinking, wow, that was interesting. Okay, what are some things that we could see now with the current prices right now? Because obviously all this is just talking about previous, what could we see right now? So we're really going to look at the previous structure of the market because we haven't really seen anything like this other than the major breakdown of 2018 and the start of 2019 here. So First thing to notice, what I found very interesting, we candle closed on the daily right at the electrical operational cost. So this is the cost of the electricity to run the mining hardware right here, or the mining rigs, I should say. Mining rigs. And we saw that exact same thing happen in 2018, where the operational cost of running the electricity was the bottom, and we can see that right here. But one thing to note, right? In my opinion, we're still at this phase right here. First major move to the downside, right? We're not seeing the hash rate drop. We're not seeing the cost of electricity drop. We're not. Right here, we saw the price drop significantly before we saw the cascade of the hash rate drop and the cascade of the operational cost to run the electricity to mine BTC drop. We didn't see that until later on. And right now, we're not seeing that yet, right? So we saw the first touch of the electricity cost hit, which is right here, move down, but we haven't seen the cascade of the hash rate drop or the cascade of the electricity cost drop. So in my view, it's still too early to see a huge run up. I'm looking for the hash rate to drop even further, especially because of the BTC halving and the actual reward given to the miners is going to get cut in half. The miners that are barely making money right now, their revenue is going to get cut in half after, early May. So that's a huge negative within itself. And then if BTC drops, the asset that they're getting for a reward is dropping, so they have to sell more of the asset to pay for the operational costs that they have to mine BTC. So it's a little bit of a double whammy here that we're seeing, and in my view, we will be seeing something like this, where we're going to have potentially another drop after the next big move when hash rate drops and when the electricity costs drop again. We'll have another drop here. But I don't think that we're going to drop further than the cost of just the electricity. Looking at the previous time frames, we'll see how far this drops to. If it does drop further, we could see another low here. We don't exactly know. Ideally, it would be nice if we saw the operation electricity costs continue to kind of go up. We see another drop here, testing this low as another higher low, and then we continue to go up and continue this larger symmetrical triangle on the weekly and monthly. But in terms of just looking at the mining capitulation hypothesis and understanding the cost of operation for miners and the bare bone minimum for the electricity, I think this was a really good analysis and gives a lot of insight as to what we could potentially see in the future. And we're not going to go over this every single day. Obviously, this is something that we'll go over once in a while because we're looking at the daily. We're not looking to use this every single day. So we'll just take that off for now. Stick back to the weekly and, go on with our merry way and look at this from a large time frame. But like always, we will keep you updated on those on-chain analyses because, I find it super interesting, and on-chain analysis is beginning to be more of a tool that I use within my trading. I didn't use it as much coming from kind of different asset classes, using more of a economic standpoint for FX and more of a single equity catalyst for stocks. This is a little bit different, and I love learning about it. So hopefully you got some value from the chart that we talked about for the daily. We will be going over it a little bit as we get into the breakdown. Hopefully it does come into fruition. But that is the completion of the, I guess, more fundamental side of things. And then now we're just going to dive into the technicals. So not a whole lot to talk about on the technicals here. We're still holding that series of higher highs and higher lows. Let's just jump right into the 4 hour here. We're already long. We've already managed our risks, so we're not risking any money here. Let's just jump right into the 1 hour time frame here. So basically, we entered long right here. We're still holding. We're up above maybe 7%, I think. Maybe let's just check here. Around 6.7, somewhere around there. And we're really looking for that next leg to the upside, potentially hitting 7,700. That's going to be my final take profit before I just sit back and potentially wait for the next market drop. Something to consider. crazy, but the S&P 500 and real estate markets are more correlated with Bitcoin than gold. And our view of the stock market is it will have another dump. Looking at the previous 2001 and 2008 crisis, we have a very good system that we are able to implement into the current recession that gives us a high probability situation to enter a short trade on the next leg down, which is what we're going to be doing. And with BTC correlated with real estate and stock markets and traditional assets, I do think that BTC could see a similar outcome, and we'll be really looking for that opportunity. So yes, we are in a long, yes, we are making money to the upside, but at the end of the day, our bias for April, maybe even in May, is going to be bearish in my personal view. I do not think that this is the start of the bull run yet. I think we'll have one more major bearish push to the downside, shaking out the rest of the weak hands, especially because this is in confluence with the BTC halving, which is a major fundamental event for the miners as well as the psychology of the holders and the investors in BTC. But at the end of the day, that's my viewpoint. Shorter term, kind of the summer of 2020, I still think it's going to be more bearish. I think that there's going to be one more major dump to the downside. And then for the Q3, Q4, and then 2021, I guess Q4 and 2021 primarily, I'm really wanting BTC to show its true colors. And hopefully, or I guess not really hopefully, but by that time, I think that the central banks will keep on printing money and overreact to a point where investors will worry about inflation of the US dollar. There might not be that much velocity in the currency because of this whole COVID crisis, but with how much printing they're going now, it's inevitable when the markets do, like a bear market will not last forever. Look at the Great Depression, right? It lasted a long time, but it didn't last forever. Things got back to normal. And the worry is they're printing a shit ton of money now, and the velocity of money is decreasing, so it's counteracting the increased supply of US dollars. But the real worry is, let's say things do go back to normal after this whole recession and there's no inflation. When people start to be spending more money, when the velocity of money starts to curve back, that is when you'll see crazy inflation, because you already have one of the two factors substantially increase, which is the money supply. All you're needing is that money to start increase in the exchange, aka increase in velocity, before we start to see significant inflation. So as of now, I still think that BTC is not yet going to be seen as any real true asset that people are going to be turning to for as an investment as of yet, because it's still very speculative. But when the global investors start to see the inflation rise, the CPI numbers in the United States go up, which is the Consumer Price Index, cost of goods and services go up, then you will start to see people flood into these safe haven fixed supply assets like gold, silver, and cryptocurrencies. So I'm taking it more of a macro view of BTC and just thinking about it objectively. If I just lost my job, would I be investing in Bitcoin? Fuck no. I would be waiting, trying to preserve my capital, putting it in US dollars until I'm able to get a job again, and then potentially start investing. But, with over 10 million people filing for unemployment claims just in the United States alone, are you really looking to invest? No, you're looking to preserve your capital. You're not looking to make more money. You're looking to preserve because your 401ks are gone and all that stuff. That's my take of it. I'm just rambling at this point, but my bias has not changed. My bias has been the same for weeks and weeks now, and we're patiently waiting. Yeah, we're making money from BTC on the upside. That's great. That's fantastic. Who doesn't like making money? But at the end of the day, my bias and my overall structure for April and this summer is going to be bearish for BTC because of the more fundamental situation of the halving of the miners and basically all the stuff we talked about in confluence with more of the global macro traditional assets and the whole lot of stuff going on. Like if you're in global macro and if you're trying to understand how Bitcoin fits into it, it's a rabbit hole of information. But I absolutely love it, and that's why I'm presenting this information to you now. So that is the completion of the Bitcoin section of the crypto market update. Hopefully you found it somewhat valuable and useful. We'll quickly go over the altcoins, but like I said before, at the end of the day, we're not really looking for any longs or shorts really, because we're already in a long, we're already exposed to the long side and our view is more short. So if we're making money to the upside, in my opinion, there's no real need to add risk onto another trade just to squeeze a little bit more profit to the upside when my next real major trade, my next real major shift is going to be the downside. So I don't really need to squeeze that last little drop of juice to the upside because it's already up, who knows how much since a low of under 4K. It's just, trying to scrape off the last little bit. It doesn't make sense to me, and I'd rather just see what I can get with this trade. It's looking pretty favorable. I have zero risk, and if it goes to 7,700, that's great for me. I'm making money, and then I'll just patiently wait until the next setup comes. All right, I'm going to get a little bit of water, and then we'll quickly go on the alts here. But like I said before, we're not really going to touch on them too much because the main trade is going to be that short that we're looking for. So I'm going to get a little bit of water, and then we'll continue. All right, let's continue on here. Starting off with Ethereum. So we're now in a bit of consolidation after a strong move to the upside. But like I said, we're not looking to long or anything. The only time we're really looking to short is if we get a really, really nice price action pattern within this consolidation. Definitely still early to tell just yet. It would be nice to see maybe an ascending zone get broken. That would be a good structure of the market. We don't really see that right now. I do see a little bit of a squeeze, but it's definitely way too early to call anything as of now. The only thing we're really looking for right now is really a short here. So basically what we're looking for is a break not only in the ascending zone, which is connecting the higher lows, but also the horizontal zone. So around right here is going to be a really optimal place to short, in my opinion, to make to get some exposure to the downside. You could look at this potential squeeze and then get an early entry here before it moves back down below our key level of support, but it's a little bit more risky of an entry entering around here. Definitely a little bit more risky, but you do have confluence with the descending zone and the horizontal zone, as we can see within the previous historic price action. So there's a level of confluence for Ethereum at around $180 for a resistance. But if you want to be a little bit more conservative and play it safe, I think it's best to stay and short under 140 because then you have the confluence of the ascending zone and the horizontal zone both getting broken, creating a pretty high probability situation to make a move to the downside. That's going to be my trade for Ethereum. Not going to be looking for longs because I'm already in a long in BTC. If XRP goes up, if Ethereum goes up, you can have a high probability situation that Bitcoin's going up as well. Most likely the opposite. If Bitcoin goes up, Ethereum goes up. Not really the opposite way. All right, so Link is making another move to the upside here. Wouldn't be surprised if we hit $3.30, but like Ethereum, I think the longs are a little late on this one. We could hit here. I wouldn't be too surprised, and that would be a pretty significant move. Obviously, from where we're currently at right now at the consolidation to our current zone, and then we can see that it is forming a nice little ascending triangle pattern right here, which is that little resistance right here on the 1 hour, right near the break of the zone. And then let's get our trend line, connect the resistance, support, like so. Like so. And then we got our little projection. Like so. So that's how I would draw this current structure. And then a possible trade could be a break with strong buy volume. We already have that. We closed above the resistance right there. We'd be looking for a nice retest valuing the previous resistance as a new level of support. Stop loss is just above the previous low. Take profit is at the nearby supply zone. Let's just see how that looks on the 4 hour. Looks pretty good. Looks like a possible opportunity here for us, but I'm going to play it really safe. That could be an opportunity here that we could be entering on. But it will be a low risk trade, right? Because we are counter trend trading in our view, and it just makes sense for us to be a little bit more patient. But this is still an opportunity that we could be looking for, and if it does pull back, we'll be letting the Performante Premium members know if we are going to take this. But yeah, this is something that we could be looking for. If the market was more bullish, this would be definitely something that we're going to be looking for. But at this point in time, it's going to be a little bit more, I'm going to be a little bit more hesitant because I'm already making money to the upside. This would give me risk of 4.6%, right? If I take this trade, there's a chance of me losing this trade, losing 4.6% of whatever amount of money I put into the trade, right? So I'm already making money. I have no risk on the table. And if it continues going up, I'll continue to make money. And I have no risk. So I'm not going to make as much money if I don't take this trade and if it goes my way. But I'm very comfortable making the current amount of money I'm making with this trade. It's not a huge amount of risk. It's not a huge amount of reward. But at the end of the day, you can't get upset at a risk reward of like 2.4 in a counter trend trade when it goes exactly your way. So that's going to be the link opportunity. I'll let the premium members know if I do enter. But at this point in time, it's giving me a little bit of hesitation. I do like the S&Ps going up here, which does give me a little bit more indication that we could see a little bit more bullish volume coming into the crypto market. But still, in my opinion, not something that I find attractive enough to be jumping onto. But still a trade that could be a possibility. XRP, all right. Blow off top, definitely. Previous support, new level of resistance. Very simply understandable right there. And what we're looking for is just failure to make a higher high. And then once we see this ascending zone break right around here at around 1850, that's going to be a short opportunity here in my personal view. Really, really high probability trade here in my personal view for short on XRP. If we do get a break around this zone right around here, and let's just make it green because it's now going to be a support zone. Previous resistance equals new level of support, and let's make that green as well. All right, so that's going to be the trade. Not really looking to short unless it breaks down below this zone, but in my opinion, that's a pretty high probability situation that we could be seeing for XRP with some great risk reward parameters. 4.7, anything over 3.5 around there is some good risk reward parameters. 2 is really the bare bones minimum that I'm looking for have to any risk reward that I'm taking, and you really have to understand what type of market structure you're entering in. If you're entering in a tight consolidation, you're going to have a very different risk reward structure than if you're looking to get an extension from a bullish wedge pattern as a continuation to the downside, for example. Different structure, different trade plan. You can't just have a single trade plan for every single trade you take, in my opinion. All right, BNB is going to be the next one. Like I said, again, it's very repetitive, but that's a good thing because we have a systematic approach to look at the market. We're not just going off of touchy-feely emotions. We're going off of hard lines that we can validate and say, yes, this is dependable, this is valid, this is a trade because A, B, and C. And we can say that. It's not because I'm feeling it. I'm feeling good. I woke up on the right side of the bed this morning, and it just looks like it's going to go down. It looks like it's going to go up. There's none of that. We have an objective. It's objective. You can what's it called? Give me one moment here. It is. You can replicate it. Replicable. I was trying to find a word that is like you can replicate it over and over and over and over again, which means you can backtest it and you can tweak the system. If you have a criteria that is dependable and you can test it over and over and over again, you can take out the tweaks that are not so great and you're left with a system that you know is able to profit. As long as you are disciplined enough and are able to follow the rules that you have set through testing your strategy over and over and over again. But yeah, as of right now, BNB is the same as basically every other real alt here. We've got a move and a pop up to a new high here, but at the end of the day, we're not looking to continue because we already have exposure to the long side. We're making money on Bitcoin. If Bitcoin goes up, BNB goes up. It's not too often where BNB or another alt goes up substantially and Bitcoin doesn't go up. Usually it kind of goes together as a single asset class. So as of right now, I'm long Bitcoin. If BNB goes up, high probability I'm going to be making money from Bitcoin's price appreciation as well. So yeah, going to be looking for the shorts here. Going to be very patient, but not much more to talk about for BNB. Yeah, same thing. Yeah. Let's just look at the key level of resistance that we had right here. We can see pretty well respected zone right around here, and now it's acting as a nice new level of resistance. So yeah, that's going to be literally the same trade as we talked about for the past. BNB, XRP is not so much because it's a wedge, and BNB has a horizontal, EOS has horizontal, and Ethereum has horizontal. Right, so EOS is looking similar like XRP, like Ethereum, and then, XRP is not the similar as the rest of them, but XRP does still provide a good opportunity for a short. So not a huge amount of analysis, obviously, but this is the time where you sit back, learn new stuff. In my opinion, this is not the time to be trading every single day in the market, because all you need is the next major market move, and you're going to be making some killer money in my view. Yeah, it's a lot of chop right now, a lot of consolidation, which isn't bad. Like if you're just trading within this consolidation, it's not a bad thing. I traded entrance right here after it broke and retested, and now we're slowly creeping up here, and I'm being very patient. Oh, excuse me. And I'm not really looking to take any profit just yet. If hopefully it makes a new high, breaking 74, and then I'll be looking to take some profit. But yeah, I will let the Performante Premium members know. Not a whole lot from yesterday, and that is going to be the completion of the crypto market update. I really hope you enjoyed the on-chain analysis part of it at the beginning. I'm learning a tremendous amount about blockchain, on-chain analysis, how to actually do quality on-chain analysis, and I never really did it before, but it does provide a lot of insights as to more of the back end of the crypto market, which is obviously extremely important, and understanding the cycles that the miners have is very important as well. So bringing it all together, it's more of a larger macro perspective within the cryptocurrency market, not just looking at the price of Bitcoin, but looking at the price of Bitcoin on different time frames, looking at different indicators, looking at the miners' capitulation, looking at the global macro outlook. A lot goes into it. Also looking at the correlations, right? We understood that real estate has a 0.82 correlation with Bitcoin, and stocks have a 0.75. So we're not looking at gold for correlations. We are looking for more traditional assets like stocks and real estate for a potential sympathy play or front running. If stocks are going up, it could be front running BTC because they're pretty highly correlated. If 1-to-1 is Bitcoin correlated with Bitcoin, real estate is 0.82. That's super high. That's extremely high. So you got to take that into consideration. But that is the completion of the crypto market update. We will be answering all our questions on TikTok and YouTube at the end of it. But this is going to be the end of the recorded version that we'll be posting on YouTube and Library. Also, quick thing, if you don't know what Library is, let's just open it up here. This is kind of like YouTube, except it is using a decentralized platform, basically, where, you know how YouTube is censoring a lot of cryptocurrency videos or crypto-related videos? This is going to be the problem solver for that, basically, where you're not going to get vetted by some crypto employee and going to get shadow banned, basically. So it's pretty interesting. One thing I like is there's an internal currency called LBC, and you could make money for posting content. You can make money for views. Kind of like YouTube, but it is going to be, in my opinion, a better way for cryptocurrency enthusiasts to watch crypto videos, because YouTube won't be banning them. YouTube won't be giving them red flags and stuff that we've been seeing. We talked about this for a little while. We did our due diligence with which might have the best exposure for the long term, and Library is the one that we picked out of all of them. So definitely, if you are interested in trying something new, if you are a content creator and want to make a little bit of money at the start and then obviously make more as you get more followers, definitely check that out. We found it pretty useful. It's very, very easy to post, very easy UI. There's not a lot of content creators on there, so it's actually pretty good because they're starting from a pretty low level. It's like starting TikTok pretty early or starting Instagram pretty early. You get a massive head start, but like anything, there's going to be risk involved with putting in the time to post, putting in the time to create content for that platform. And then if it doesn't actually get adopted, that's wasted time, wasted effort, and wasted money, really. So that is a level of risk, right? And TikTok was a level of risk. We adopted it somewhat early, and obviously it paid off pretty well for us. We have a pretty good following on there, pretty large page in the crypto scene for TikTok, which is obviously something that we're looking for. So yeah, definitely adapt or die in this market, in this current world we live in. So that's what we're doing, and we're always open to try new stuff, try new platforms, try new social media platforms, and really expand our reach, expand our exposure to different markets, different platforms, and I think that's beneficial for a brand, as well as just understanding marketing in general. So that was a little bit of a rant, but hopefully you enjoyed it. This is the completion of the crypto market update. I will be answering all questions at the end of this video after the recording, so thank you very much for watching, and until next time, happy trading. Alright, so that is the completion of the crypto market update. Hopefully you enjoyed it. We'll now go and answer every single question within the TikTok as well as the YouTube. Just looking at the Discord here. Let's just look here. Alright, so let's go on our YouTube. I don't think we have anyone on our YouTube who questioned. Chuck Knobs, morning. How's it going? Chuck Knobs, welcome to another crypto market update. Good to see you. Hopefully you are doing well. All right. Let's now go to the TikTok questions. If you have any questions revolving blockchain, crypto, investing that pertains to Performante, definitely let us know and we'll be able to answer. If you have a question, should I buy Amazon? Should I buy whatever airline company that you're thinking of? I'm not going to answer that. I'm not going to give you an answer. We're not financial advisors. Just think of me as a random person on the internet who's very fascinated by financial markets and cryptocurrencies. And it's just my 2 cents. It's just my 2 Satoshis, and take the information as such. I shouldn't be your resource for investing. You should be your own resource for investing. You should not be a sheep. Do your own due diligence, do your own research, and come up with your own conclusions as to why you want to buy or sell any asset. All right. Let's now go into the TikTok questions. Hello from Jonah. How's it going, Jonah? Hopefully you are doing well. ABC almost done wedging, up or down? ACB, sorry. Is that Aurora, the cannabis company? I believe so. I'm pretty sure ACB is the ticker for Aurora. Almost done wedging, up or down? To be completely honest, I know that the cannabis sector, I think that's what you're talking about. I know Aurora's ACB. They really took a hit. Look at HHMJ or HMJR. Those are the ETFs for the Canadian cannabis companies. Those are what I'm going to be looking for to invest in cannabis sector when I do. But as of right now, just because of how bad the cannabis companies are hit right now in terms of the stock price, in terms of the huge amount of supply. Because what happened is when they had their huge boom in 2017, there was a huge amount of companies who said, oh shit, there is an influx. The demand is going to be insane. Canada just legalized, and they put the bill through. So there's a massive amount of companies that all came into the sector and wanted to get a large amount of supply. Simple supply and demand. Once they started operations, they got a lot of money from an increased stock price appreciation cost, and then they sell the stock at a higher price, higher market value. They could raise more money, which means that they could put more money into the business. So a lot of businesses grew exponentially during that time. Now, when things fizzled out and the hype was gone, there was a lot less demand than people thought. Remember, Canada is still fully legal, but the United States is federally still illegal for cannabis. So a lot of states are not obviously able to sell cannabis. So yeah, I think that, the sector took a really big hit because they have a massive supply shock. So there's a shit ton of supply on over-leveraged companies. So in my personal view, I do think that it could go down a little bit lower, but I do think the sector has huge potential because I do believe in cannabis and its medicinal properties. We have CB1, CB2 receptors in our bodies, which are LOX, and these cannabinoids that are in cannabis as well as other vegetables and other plants. These cannabinoids lock into and turn, I guess, the key of the CB1 and CB2 receptors. And these receptors are all through our body. It's weird that cannabis has like the key that unlocks parts of our brain. Look into it. They're called CB1 and CB2 receptors. I'm not in the medical field. I just have researched about it. But yeah, it's still for me too early, especially with how much of the market cap got decimated with a lot of these cannabis companies. And also on top of that, throw in COVID-19 recession / depression. I think it'll get a lot worse. Try raising money at a market cap of like 100 million, and then a year later you're raising market cap of like 10 or like 5 million. That's going to be pretty brutal for just previous investors, and it's going to be really hard to raise market cap. As well as how many people are going to be investing at this point in time. Really, like, not many people. Everyone's just worrying, saving, trying to hold USD to capitalize on this market shift. So yeah, that's my view. I am going to be looking at cannabis companies later down the line in more recent actionable situations. I think it's still too early, but I'm going to be looking for the main ones. You can look at Aurora. You can look at CGC, Cannabis Growth Corporation. You can look at ETFs, which are HHMJ, Horizons Marijuana Index, or you can look at HMJR, which is the junior, which is smaller cap compared to HMMJ. So yeah, that's my take on the cannabis sector. I think it's a great opportunity, but I just think it's too early right now. They got a massive amount of hype back in 2017, and they definitely are still on the downtrend here. So that's my personal view. I really want to jump into Riot, but nervous. Yeah, so if you, for those who do not know, RIOT is a ticker name, and it's called Riot. It is a mining company that is public, that you can investing in the public stock market, and it gives you exposure to cryptocurrency sector without actually owning cryptocurrency. So if you're looking to purchase or have exposure in crypto markets but don't actually want to own crypto, you can just purchase assets on the public market that are working with crypto. So one is Riot, RIOT, another one is Mara, MARA, another one is Dash, DASH. Those are all in the mining staking business, where they're basically using computational power to create more digital value or digital currencies. Basically, either proof of stake or proof of work. Dash is proof of stake because they are proof of stake, I believe. I think so. They have a huge mining pool. And then Genesis, Riot is more Bitcoin, I believe. They have multiple, but yeah, they're basically in the mining business or staking business, and you can invest in them and gain exposure to the crypto market without actually investing in cryptocurrencies. I personally think that investing in cryptocurrencies is great because, just in terms of like, an equity can go down, right? In terms of going to zero, and yes, Bitcoin could go down, but you're like, I view equities different than Bitcoin. Bitcoin's like digital real estate. There's like it's like, in the world, there's a finite amount of land, right? And as time goes on, people develop it. It costs money to develop, but once it's developed, it's pretty easy to build on. Same as Bitcoin. It's hard to mine, but once Bitcoin is mined, it's there, right? It's there to use and to hold and to have. But there's only going to be a finite amount of land. There's only going to be a finite amount of BTC, 21 million. Less than that, really, because things get lost. People send it to wrong addresses. People throw away old computers that had BTC on them. They get lost, and then there's going to be less than 21 million. So I look at Bitcoin as digital real estate. I own a little bit of the network because I own Bitcoin. And as time goes on, the network will grow. It'll grow and have more value, because having a decentralized global network that provides the ability to transfer large amount of assets in a quick, short, efficient process provides value. That is valuable. And if it's not, what is the US dollar? It's a medium of exchange that is comprised of just confidence. That's it. And it's stable and allows a medium in exchange between goods and services. And it's basically a representation of stored energy or store value. You can't do anything with paper, right? You could burn it and make a fire, but like you can't build a house. You can't do anything with this piece of paper. But what you can do is pay for the goods and services, exchange that value with an actual service or good that you can use in your daily life. And it's kind of the same with Bitcoin. Like, you can't hold the Bitcoin and say, hey, I have this. But the value is the network itself and the ability to send and receive assets on a global scale very efficiently, very quickly, and with very little fees without a third party, taking their cut like the banking system, and you have complete control over this. This is the value that Bitcoin is providing, in my personal view. And it's a very positive, very forward-looking viewpoint where a lot of people are banking on the banking system. I'm saying you should bank on yourself. You should be the primary caretaker of yourself, unless you have obviously like disabilities and stuff. But looking at the government and say, I'm helpless, help me government, like that, in my opinion. Yes, now if you lost a job, definitely take help from the government, but over a long period of time, just being a slave to the government and getting handouts and having no independence, in my opinion, it is really detrimental, because you're going to have no freedom. If the government's going to give you everything, they're going to take all your freedom with it, right? So, let me just see here. So yeah, that's my take on it. Let's just look to make sure I recorded it. All right, things are still recording back in normal. All right, let's continue. Great Outlook says, Mr. No Thumbs, thank you very much, Mr. No Thumbs. Mara and Riot might not be on the NASDAQ or if BTC rips. Rips as in go down or up? I'm not exactly sure. Rips usually means up. Like if it rips up, I don't know what that means. Back. Rips back, like down. I think they'll still be. The difficult thing is how efficient is these miners. We talked about miner capitulation. If you don't have efficient enough mining hardware, or like if you don't have efficient enough of a system to mine, you are going to get squeezed out as a miner, no doubt about it. Because as the hash rate increases, difficulty increases, your profitability goes down, and then if Bitcoin drops in value, you are now having to sell more Bitcoin to cover the same operational costs. And if Bitcoin drops lower, you're going to sell all the Bitcoin you have, and even in your treasuries, to pay for the operational costs until you have no more Bitcoin to sell, and then you just literally go out of business. You don't have any more revenues coming in to pay for your operational costs, and every month you are losing money which you don't have, losing value which you don't have. So yeah, that's mining capitulation, and I do think after the BTC halving, this will happen again. We just had one with the 50% dump, and then I think we're going to have another one after the BTC halving. Only leaving the most efficient miners, which in my opinion is true free market capitalism. I do not believe in bailouts. That's not capitalism. If the airlines got bailed out, they weren't saving for a rainy day. They were doing buybacks. In my opinion, that's so bullshit. That's so fucking bullshit that, oops, we weren't managing a company properly. Whoopsie, we need 200 billions of dollars in bailouts because we can't fucking manage a business properly and have some sort of cash reserve. Like a week into it, we're now needing a bailout. That, in my opinion, is total bullshit. And the people that are mismanaging those companies and corporations should go out of business, should lose their jobs, because that pain will cause them to reflect on what they did improperly, and that will then make them say, oh shit, I don't want that to happen again, and then they will be able to learn from the mistakes. But they're not. They're getting bailouts. They're saying, oh, that was oopsie, we could have done absolutely nothing to stop it. It was a freak black swan event. But they're getting no real, slap in the hand for all the shit they did, all the greed that they've been going through for years and years and years, buying back shares, not putting it back into the corporation to make it grow for the actual investors investing in the company, right? They're benefiting their individual selves and actually destroying the company, because those profits could be put into other places that make the company grow more efficient. And basically, you're investing into the company, but they're not doing that. They're just buying back stock, so the share price goes up. So then their options, their shares go up in value, they sell it, they're more in the money, and then they could sell to make more money personally. So yeah, I completely think that a lot of these corporations, these too big to fail corporations, should fucking fail. That sucks for them, but at the end of the day, that is true capitalism, it's true free markets, and that's what will prevail, and that's what the world kind of needs, in my opinion. Less government. I don't think that big government's a positive thing, basically. Yeah, so that's basically my view of it. A little bit ranty, but that's okay. I got $500. What am I buying? I don't know. That's for you to decide, my man. Lol. Okay. Gotcha. What do you think about RMO? I don't know. I have no idea what MRO. Sorry, is. Never heard of that ticker in my life. Let me just look here. Oil. So you're looking at oil. Yeah, in my personal opinion, you're probably thinking, wow, oil's really low. It must be a good buy. But in my personal opinion, I never ever look at the price of an asset. I look at the price action, if that makes sense. I don't care if Bitcoin's at 10,000 or 100,000. I care what the price has done in the past couple years and what it could be doing in the next week or 2 weeks. And for investing, it's very different, obviously. But at the end of the day, I'm not going to be the person to tell you what to buy, when to exit, when to enter. I'm not a financial advisor, and I'm not going to be the one to tell you what to buy or sell. That is 100% up to you. You are taking the risk. You are incurring the risk and reward for any investments and trades that you take. My job is to give you an unbiased view of what I think, and you make with it whatever you want. Take it as a grain of sand. With the rest of the information that you're probably getting from the internet. This is just random person on the internet giving you his 2 cents of what he thinks of the market. True, but what do you think about it as a stock? Yeah, see, I have no idea. I've never even heard of the company, let alone even looked at the price of the stock, look at the fundamentals. I have no fucking idea. All I know is a ticker symbol and the name of the company. So I can't give you any positive or negative outlook on that stock because I have no idea. And you would not want advice from a person who doesn't know anything about what you're looking to invest or trade in. That's not good proper due diligence at all. So the best thing for you and me both is for me to not say anything about it because I don't know anything about it, and for you to ask someone who would know a lot more about the oil sector itself, as well as the single stock that you are looking to invest or trade. So that's basically all the information I can give you on that. 10-4, yeah, I'm doing my own research as we speak. Yeah, definitely by far the best way to do it. Do your own due diligence. If you're not relying on someone, you are the most free you can ever be. Because you can make your own money, you can make your own decisions, you are writing every single letter, every single word in your book of life, right? But if you're, let's say, for example, following a trade signal, or if you're following someone, that's 100% fine to start. I actually recommend that because if you don't know what you're doing, it's very easy to lose money. If you don't know the process of how to actually properly set up a quality trade plan, or how to manage risk, or how to manage your psychology if you're in a losing trade. Like, there's a lot of stuff that you don't know when you're starting to trade, but I think it's great to get a mentor and to get someone who actually is making money in the markets and who's actually been doing it. But at the end of the day, every single trader, I think, should be able to learn from them, grab everything they need, and then say, okay, I learned a lot from this group of traders or this individual. How do I make it my own? Because every single trader views the market a little bit differently. Their eye is going to pick some stuff up that I might not be able to pick up, or another person might not be able to pick up. And they'll miss stuff that I may be able to pick up. So you got to understand what you're good at, what you're able to pick up, and what you're able to understand and what you're not, what your blind spots are. And then you need to trade in a way that allows you to manage those blind spots, hopefully even completely not trade things that are in your blind spot, and you're able to go heavier on and only trade the setups that you have edge in. And that's kind of what we call having an edge, is having a system, a dependable, you can replicate system that allows you to backtest, that allows you to tweak, that allows you to see which part of my criteria is not working if you are not able to make money, and having a system in place that allows you to really, really understand why you're either making money or you're not making money over a series of trades, not a single trade, right? Just to make sure. So I think that's the end of the crypto market update here. I don't see any more questions coming in. Hopefully I was able to answer all the questions in a thorough way that is able to be that you're able to understand, not just for yourself, but for the other members that are viewing the video. So that is the crypto market update. Also, I will be posting it on the Discord that we have here. This is the high quality analysis right here on our Discord channel, and we post 2 videos every weekday. We post one global macro update, which is talking about more global macro, like, you know, gold, silver, US dollar, stocks, things that are happening in Euro, talking about central banks for ECB, the Fed, Japan, more global macro, obviously, with the name. And then we have one strictly talking about the cryptocurrency market called Crypto Market Update. And we do this every weekday. So if you want to stay up to date on the economies around the world, economics, global macro, potential opportunities for commodities and the S&P, definitely check that out. It is every weekday. And then if you're interested in cryptos, trading in the crypto markets, and just wanting more information about it, on-chain analysis, fundamentals, technicals, all that stuff, we do this every day as well. So this is great knowledge and great insights as to how we think and how we navigate the markets, basically provided every single day. So definitely check that out if you are interested. Cam said, I was hoping we would get a new low. Stocks climbing so much now. Yeah, so we did an entire analysis on this. I highly recommend you watch this video for us. I give you a systematic way that we are going to approach the next major market moves for the downside for the S&P. We have backtested a strategy in 2001 and 2008 that gives us a very high probability to speculate and to potentially capture the next 2 major market downtrends that's going to happen within the S&P. So this video right here, absolutely free to watch, and it gives you exactly what we're looking for within the S&P 500 in order to capitalize. Very informative, good, solid video. And it's right here. This is it. When will the next drop be in the stock market? I'll actually make another one today in the global macro update, because I don't think many people actually viewed this enough to understand it. But I'll make another video today really specifically talking about when will I enter short on the S&P, basically. Very pivotal point from a correction to a next downtrend. And yeah, I don't think that video obviously got enough views. I think that the information in there is super important, and I'll make another one kind of going more in depth, but then also making the videos shorter, because like trying to grab an attention span of like in an hour for someone who watches like TikTok 1-minute videos and still doesn't actually watch the whole video, even if it's interesting. Like, I just feel like the focus for a lot of individuals is diminishing so rapidly. You know, like, how many videos have you watched that's over an hour, but have actually like digested the information? Probably not a lot, but yeah, I'll make another one today. Definitely check it out for the global macro update. I'll go over it yet again, but definitely check that out. I'll move this to the side, and then we can see, sorry you missed it, got it, I'll sub to your YouTube. Thank you very much for the subscription, we really appreciate it. And then for anyone else who has not subscribed to our YouTube, definitely check out that YouTube if you're looking to get more insights regarding financial markets, cryptocurrency markets, and both technical and fundamental analysis. So hopefully you enjoyed this. I will close this TikTok and YouTube live because we don't really have any more questions. And we're slowly going to start creating our global macro update, which will be a little bit later on today. So hopefully you enjoyed this. I will post this on YouTube as well as our Discord before we get started within our global macro update with timestamps, so you can kind of go to each of the discussions within the video, so you don't have to just like slowly wait. You can just go to the comments and say, oh, I want to see him talk about Link, or I want to see him talk about BTC, or the fundamental news, kind of anything revolving that. We always timestamp it on YouTube, so you can really quickly view whatever you're looking for. So hopefully you enjoyed this crypto market update, and until next time, have a good one, everyone.